Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. It's Monday, November 24th. Now, as everyone knows, my site went down. Total mystery to me. It went down over the weekend, and it was down all morning. And, it just came back on by itself. I have absolutely no idea what caused it, and I have no idea what fixed it. I had gotten no emails from Google or Blogger explaining the situation, so it's just a total mystery. Technology, that's what it is. Anyway, I'm glad it came back up, and I'm stymied at these deals that are being done, bailing out these banks. Everyone thought Citicorp was fine. I thought they got part of that $700 billion. Now, all of a sudden, we find out they're on the verge of bankruptcy again. Boy, they lied right to the bitter end about their situation. I don't think anybody knew how bad things really were. Anyway, we're bailing them out. I don't know if it's throwing good money after bad. What stymies me is the number of corporations that we're bailing out. I can understand bailing out one or two or three, but now we're getting into numbers that just don't make sense. It just doesn't make sense. It's a sure sign of like throwing good money after bad. It doesn't feel natural to me. It doesn't feel like a natural course of events. It feels like it's being manipulated. And when you try to manipulate things in the marketplace, they usually blow up in your face. I get the feeling that it's like, you buy a stock at 50, it goes to 40, you double up. It goes to 30, you say, well, it's really cheap now, so you double up again. And then you double again at 20, and then you're throwing up on it at 5 and you're out of business. And that's the feel this has to me. There's just too many bailouts. A couple, okay, but one after another, and I just don't think it's over yet. So keep your fingers crossed. I hope they're right with this. I hope it works, because if it doesn't, the government's going to be bankrupt, and then things will really be bad, and then we'll all be forced to mark things to the market. So like I said, keep your fingers crossed. Okay, another day, another 300-point rally, a follow through from yesterday. But I just don't see it as the beginning of anything. I think it's just a rally off an oversold condition. A lot of stocks that were in free falls for the last week or so are starting to kick back up into their resistance areas. Some of them have some more ways to go on the upside. Just as the Dow and some of the other indexes are kicking back into resistance, I think that once this kickback rally runs its course, which could be another day or two, or it could be tomorrow, I think we're probably going to roll over again. At least that's the way I see it as of right now. And I'll show you what I'm looking at when we take a look at the major indexes in our final segment. So I looked at my 500 stocks. I could not find a stock that fit my eye. I mean, some stocks are so oversold, they look like they want to kick back, but I just don't want to recommend them on the buy side. They're just, I don't know. They just don't look right to me yet. But they do look like they're going to kick back, but they're going to kick back without me. So we'll take a look at the major indexes, and we'll see how much further this rally has to go, or if we've pretty much run the course, which I think we have. So let's take a look at the indexes. Don't go away. Okay, here's the Dow Jones averages, the daily bar chart. This is our triangle. This is the bottom of the triangle, and this is the trend line coming down. So now we've kicked back into the triangle here. If you watched my video on Sunday night, I mentioned the fact that this could kick back up into this area here. So this is no surprise to me. But this whole pattern here, starting at the bottom and moving into it, the more you move into it, the more resistance there is. So that's why I don't really expect this rally to carry a whole lot further than it has already, because it's just technical analysis 101. That's the old support becomes resistance. So That's our Dow. Let's go take a look at the transportation average. Okay, here's the transports. Now, in Sunday night's video, I mentioned the fact that this hadn't even gotten to the bottom of the triangle, but today it did. It didn't quite get all the way there, so there's probably a little bit more room left in this, maybe tomorrow. But like I said, technical analysis 101, that this whole pattern here is going to be resistance. So another day or so of maybe just going sideways, but I just don't see this as the beginning of anything. I just see it as a rally out of an oversold condition. All right, we'll go take a look at the Russell 2000. Okay, here's the Russell 2000, and you can see that it's very similar to the transportation average, that there's probably a little more room left in this rally just to get it back up into the same area that the Dow had gotten. But this is our triangle, and this is our resistance. This is the beginning of our resistance area, and like I said, maybe one more day on the upside, or maybe a day or two going sideways. But I just see it as a rally coming off an oversold condition. That's how I read it. Okay, the SPY, which is basically Standard & Poor's 500, looks very much like the Dow Jones, kicking back up within the triangle. You know, a little more on the upside maybe tomorrow. Yes, I don't see it as a 500-point rally though, but I think maybe more of a sideways motion, and then probably roll over again. Then here's our QQQQs, NASDAQ top 100. And you can see here also kicking back, just getting to the bottom of the triangle. So there you have it. They all pretty much look the same. The Dow and the S&P kind of got into the triangle a little bit more than the Qs and the Russell 2000 and the transports. But like I said, I don't see it as the beginning of anything because this whole pattern here is our resistance area. So that's my view of the market. Until tomorrow, this is TK signing off.